and to welcome everybody online. We are also going out live streaming, so welcome to everybody out there. Let me also make a couple of housekeeping comments before we go any further. The event is going to be on the record, and as I've said, is being live streamed. And very importantly, of course, tonight's event is co-hosted by ourselves at Chatham House with the 48 Group Club and, of course, the Chinese Chamber of Commerce here in the UK. When the event is finished, or the formalities are finished, there is going to be a reception for everybody that is welcome to attend upstairs in the Neil Malcolm room, which is on the ground floor, and that will take place immediately following the event. And the reception will be sponsored by the Bank of China as well as HSBC. So let's get going. I was going to introduce you to the one and only Stephen Perry from the 48 Group. But sadly, I gather Stephen has a very bad bug. And given how warm and so many people are in here, it's probably a good job that he's decided not to come and infect the rest of us. But in his place, as I just teased the one and only Peter Nolan about, and Stephen, I'm sorry, but I can't resist saying it's an upgrade. Peter is going to come and say a few words. Peter, as I'm sure many of you know, is if not the top thinker about broader matters of China and the UK, and goes back a long way and is right at the core of the spirit of everything that Stephen talks about so often about China. So Peter, please, yes, please do.
Thank you. Thank you very much. It really is a great pleasure to be here and a great honor to introduce Zhou Xiaochuan, and especially on behalf of Stephen and the Icebreakers to welcome Zhou Xiaochuan to give this talk. In fact, we were just remembering that last October, which now seems a very long time ago in terms of global markets. Last October, Jim's muttering, very long time ago, and we had a most interesting talk with you, mainly about the question of the stability of global financial markets, and particularly thinking about what China's contribution can be to regulating, intelligent regulation of global financial markets. And it was a very interesting discussion, and I thank him for that discussion. Obviously, as China continues increasingly to open up its capital markets to Western financial institutions, in which UK-based institutions will play a very important part. China has to consider very carefully its interaction and consider carefully the degree of stability and the way in which financial institutions are regulated in the West. And China and the West have no choice. It's a choice of no choice. China and the West must work together to try to cooperate and together influence intelligent regulation of global capital markets to make sure that this integration is safe for everyone. So it's a great pleasure to welcome you tonight to talk about what this very, very important issue for this country, for the West, and for China, and indeed for the whole future of the global political economy. So thank you very much indeed for coming to join us. Thank you.
Thank you. I'm also now delighted to introduce another special guest, Mr. Fang Weijian, who's the chairman of CC UK, who, amongst other things, is also leading the efforts of Bank of China here in the UK, and has the distinguished pleasure of introducing formally our guest this evening. Welcome.
Thanks, Lord O'Neill. Thank you for the kind introduction. And President Zhou, ladies and gentlemen, good evening. First of all, on behalf of the CCC UK, I would like to thank you all for joining the Icebreaker lecture tonight. Thank you for choosing to listen to our lecture instead of the debate in the Parliament that is going on now. And many thanks for Jim and to host the event tonight. And in fact, I have been told by my colleague that this lecture today has created a new record in the CCC UK event history. It was fully booked within only 1 hour. So that's the fastest speed we ever had in our event history. And
no pressure.
So, President Zhou, you can see how anxious we are to see and listen to you in person. And with over 200 members in UK, CCC UK takes great pleasure to work with, to partnership with 48 Group and other entities here at the forefront of China-UK economic and trade cooperation. There's no doubt that financial cooperation is an important part of such relationship. The Icebreaker lecture this evening gives us the rare opportunity to hear from the architect himself on China's reform and opening up in the financial sector, and help us to better understand its future directions and the opportunities it may bring to all of us. So actually tonight my task is to make a formal introduction to the keynote speaker. Actually, I'm not sure whether he needs any introduction at all from me. But I take great pride in doing it because I myself, have special connection with President Zhou. And some of you may know that President Zhou used to be a senior executive member of Bank of China in head office many years ago. And many of my Chinese friends also share the same feeling because President Zhou has also worked in many other Chinese financial institutions, including Bank of China, China Construction Bank, China Securities Regulatory Commission, and the People's Bank of China, etc. So I'm not going to repeat his CV and all the official positions President Zhou has ever held, but I must add that President Zhou has had a number of other titles in his successful career, just to name a few: the longest-serving central bank governor in China, China's Alan Greenspan, Mr. RMB, and the face of Chinese economic policy in global markets. And we would all agree that this is a very kind and good-looking face. President Zhou has also won a lot of international recognition. Back in 2011, he was announced as Euromoney's Central Bank Governor of the Year. And just last month, President Zhou was given Central Banking's 2019 Lifetime Achievement Award for his contribution in reshaping the Chinese economy, which will be presented to him tomorrow night at the annual Gala dinner. So President Zhou, if you don't mind, let's give you a big congratulations one day ahead. Congratulations. Now, without further ado, ladies and gentlemen, let's extend our warmest welcome to President Zhou Xiaochuan. Welcome, President. The floor is yours.
Have a mic? Oh, yeah, I already have.
If you
here.
feel happy, please feel seated.
I choose to standing here. Thank you very much. It's my great pleasure to be here in Chatham House to have a talk. Thanks for Peter and Mr. Fang's introduction about me. I need to thank very much Lord O'Neill for host this talk, and my regard to Stephen Perry for the 48 Groups Club. I know that this is a very important moment for talking about China-UK economic and financial relationships. But I fully realize that for this moment, almost everybody here focus on the MP's vote on the Brexit. But it's
much more interesting.
It's impressed me that in this occasion that we have so many participants to listen to me to discuss the economy of China and also our relationships. So I'm deeply impressed, and I'm going to try my best to have a discussion with you about Chinese economy, Chinese financial sector, and our relationship. Let me start it to say that 3 months ago in China, we celebrate 40th anniversary of reform and open door policy. That was in the end of 1978, Mr. Zhou Xiaochuan initiated a serious debate on the policy making, and later on we start to have quite serious economic reform and open door policy. The people like me, or in my age, now I'm a little bit over 70, we spend 80% of my lifetimes in the economic reform. Or we say that to live with economic reform transition from centrally planned economy to the market economy. Another 20% of my lifetime, except my childhood and the age as a student, that's another 20% is in the so-called Cultural Revolution, and that's the painful life in the age of centrally planned economy. So my generation realized very much the importance of reform and open door policy. And my understanding is that the 40 years reform and open door policy is try to introducing the concept of market economy and try to understand how to run it, and try also to see that what is the best way to transit from the old regime into a new regime. There are many quite a challenging problem to deal with during the transitional period. So in this period, we have a lot of comparison with the former Soviet Union and Central East European country. And finally, that's I think China during this process reached a lot of achievement. The GDP and per capita GDP grow substantially. So what I would like to say is that the Chinese people really support the economic reform and the open door policy. It's not like in some of other countries in the transition that they may have a so-called reform fatigue. But in China, I think the people would continue to support and to implement the reform and open door policy. Also, now we still have many things are not have been done very well. But anyway, that's I'm optimistic that the reform and the open door policy can continue. Also, we got some of outside impact. For example, some countries or some economies may started to have protectionism, to have a challenge to the multilateral organizations. But anyway, we heard that Chinese response, especially our president, Mr. Xi Jinping, had a speech 2 years ago in Davos to say that China is going to embrace the free trade and the investment systems, and to support multilateral solution to that. But I also see recently we heard a lot of critics and doubt about the Chinese economy and the policy orientations. The critics say that now China may slow down the economic reform to emphasize once again that the industrial policy, the state-owned sectors make a serious market distortion. It's not in the fair competition. The market access got some kind of problem. We see that this is understandable argument. But however, I would like to see that this is a process of transition from its very beginning up to now. You should also see some of the progress in this process. In comparison with the other country, the transitional economies, some of them had a shock therapy. Shock therapy may immediately change the mentality of the people and the officials. They may try to give up the old mentality and economic analysis framework of centrally planned economy. But however, the result may not be as good as the people expected. So China, as a large country, we had a serious study of those transition experience, whether China should have a shock therapy or not. That's our conclusion is China, as a very large country, it seems not safe to do that. So China managed to have a so-called gradualism in the economic reform. Also, some things is not quick enough. It's relatively slowly. But however, in the gradual changes, China could manage to get so-called Pareto improvement. That means step by step, we see that reform and open policy bring the GDP growth, bring the improvement of people's living standard. So all this reform and open policy win the support from the whole population. So there is no big backlash, no reform fatigue. But surely there's this kind of transition strategy also brings some of shortcoming. For example, we still see some of remaining mentality of centrally planned economy. We still see a lot of debate between the different peoples. We still see some people have nostalgia of the centrally planned economy. They may strongly support central planning and industrial policy. But however, since what I said, that the whole population got very substantial beneficial during the reform and open policy. So no matter what kind of noise you may heard, but anyway, the reform directions is not going to be moved. Let me start to talk about 40th anniversary of reform and open policy. You know that my specialty is central banking and the financial sectors. just now, Mr. O'Neill, we just talk about that when the central bankers step down from the governor position, it's not very convenient to talk about monetary policy. But however, yeah, I think that I may have a brief review of the financial sector reform in China, including the reform of central banking. I may say that in 1980s, in China, we introduced the central bank. Before that, we didn't have a central bank. We have only one bank, both central and the commercial bank. So at that time, it was named as People's Bank of China. Later on, we would like to use the Central Bank of China, but unfortunately, Taiwanese already used that name. So we need to negotiate with them. So later on, we see that it's okay to be named as the People's Bank of China. But when we go to Germany, they say, you are the Volksbank. That's a joke. We say, yeah, also we named as Volksbank, but actually we are the central bank. And then we try to set up competition banking sectors. That's to have a big 5 Chinese bank and a dozen of medium-sized commercial bank for them to compete each other. In 1990s, it's we try to reform those of so-called specialized commercial bank into a fully competitive environment for the banks to have a full range of financial service. And meanwhile, we started to set up stock market, corporate bond market, and to develop insurance sectors. But meanwhile, one of the important things is to have the first round of exchange reform in 1994. So I think that the open door at that time is already started to allow the foreign bank, such as HSBC, Standard Chartered Bank, to have 100% branch or subsidiaries in China. China announced to accept IMF Article 8, that's the current account convertibility, in the end of 1996. At that time, China, I think, was fully prepared to have a much better, much wider open door policy to give the market access to the foreign financial institutions to operate in China. But however, in the end of 1990s, there was an Asia financial crisis. The impact was serious, especially for Thailand, Malaysia, Indonesia, Hong Kong, and South Korea. So people started to ask questions that in this occasion, whether we should firstly try to figure out that what was the reason of the Asia financial crisis. So substantially, the open door policy in the financial sector were delayed. In the period of year 2000 up to the recent global financial crisis, China once again to have a financial restructuring for Chinese banking system. And you also know that the further exchange rate reform. After that, Chinese financial market and China, financial sectors, I think were ready to have also that's the more open-door policy. Especially, China had a commitment when China entered the WTO. So we say that WTO negotiation was happened during the period of Asia financial crisis. Both Chinese negotiator and the other negotiator, especially U.S. negotiator and those from Geneva, to say that it's understandable that in the period of Asia financial crisis period, it was not, have a certainty, the confidence to ask China to have a more open-door policies in the financial sector. But the WTO negotiator gave a condition to say that after 5 years or 10 years, when China entered the WTO, we need to have a careful review. That's whether China needed to have a further open-door policy. So at that time, I think once again, China would like to consider the wider open-door policy, especially in market access and financial market participation. But however, in the beginning of 2007, people already sensed that the crisis of subprime was coming. So later on, there was a debate, both domestically in China, but also internationally, to say that maybe preventing the crisis contagion is more important than open-door policy at that time. So what I would like to say is that in China, the top decision maker have several rounds serious discussion for the financial sector openness. But however, the 2 rounds of crisis may, substantially delayed these kind of policy changes. So. After so many years, I think now China is in the financial sectors. We now have much more confidence that to have a further reform and open-door policies. During this. The early stage of open-door policy, when the HSBC and the Standard Chartered the banks, many others, including Citigroup, there's Deutsche Bank, when they entered China in the late 1980 and early 1990. At that time, China was in a situation of foreign exchange shortage. There is no enough hard currency. Foreign exchange reserve was pretty low. So when China encouraged those foreign banks got into the China, so each naturally they say that we had a problem of convertibility. So if you do the foreign exchange business to provide foreign exchange denominated financial service, you are not allowed to do that RMB denominated financial service. So that's the RMB business and the US dollar business are strictly separated. But later on, since the the 1994 exchange rate reform, the situation substantially changed. So that we has no longer to have this kind of obstacles. And after that, China tried to gradually to connect our financial service for that's foreign exchange and the RMB business, and allow the Chinese company, including bank and insurance company, to have IPO and debt issue not only in China, but also Hong Kong and the other market. We have ADR and GDRs in New York and also in London. So we see that in the early stage, that exchange rate and the foreign exchange reserve was a key issue to look at the Chinese policy. I think many emerging markets had a similar situation in their early stage of development. In the late 1990s, that was how to read the Asia financial crisis, and what is the ways to deal with that. I still remember that some of Asia economic leaders strongly worried about the hedge fund. Those of hedge fund may had an attack to the Thai bar to create one. But after so many years, perhaps people may have a much better understanding of that. But however, for emerging market, it's always an issue that's how to deal correctly with exchange rate policy and the capital flow. I think in this round of financial crisis, it's still a debate on that. And the IMF have some paper to have a serious review and discussion on this issue. But anyway, it's along with this economic reform and open up policy, China gradually, I think that have several rounds of exchange rate reform and accumulate quite a big size of foreign exchange reserve. Now we become much more comfortable for the further open up policy. And that's to create the condition also for RMB internationalization. I should especially appreciate that the London financial sector have a lot of support for the reform and the open up policy in China. The 48 group clubs contribute a lot to introduce some things to China. And we have a currency swap with Bank of England. That's Chinese Ministry of Finance and a large institution issued the RMB bond in London market. It's helped a lot for us. We see that in China, the people's attitude to financial openness is gradually changed. In the beginning, I mean, in the late 1980s and early 1990s, in China, people, especially the leadership, the government officials, say that the financial sector is too much sensitive. It's a bloodline of economy. It's relatively related to the national security. So It's, at that time, I think the mentality was not fully prepared for the international competition. But later on now, I think more and more people, including the top leadership and the government officials, see that the financial sector, the commercial bank, investment banking, the brokerage, actually is a part of the service sector with competition. So if you created a level playing field for the competition, it's good for the sector to grow and also for provide better quality of the service. So I think this kind of change in the mentality, I think, can be very helpful for the further policy making. We always know that we need to learn the experience in the other country. Initially, China learned a lot of experience from Hong Kong. But Hong Kong is, you know, that's a UK system for many years. So we indirectly learn the experience of UK financial market. And we know that here in London market, this is very comprehensive. It's the market with dips. You have a good regulation and supervision. So we see that we have a good opportunity for further cooperation among each other. So China, as in the transition period, I think it's very much a learning process, learning how to run the market economy. But in the learning process, we also have some puzzle. For example, that's 20 years ago, China seriously studied that's the financial sector supervision system and to learn the UK system to set up FSA. Well, recently, that people found out that FSA once again came to be a part of Bank of England. So it's also a call for China to consider what kind of financial architecture, especially in the supervision, we should have. Recently, in China, we set up a new so-called financial stability committee that's try to some extent integrate the central banking monetary policy and the financial stability policy. So we still have a lot of things needed to do, especially we emphasize the development of capital market, the diversification of financial market, especially the financial derivative market, which is a strength of London City. We need to have a further reform in the pension system and develop a pension reform. Let me also talk that for Chinese financial sector, we emphasize very much the financial sector should provide the service to the real economy, not only for financial sector themselves. We saw some of you know, that's speculation of those of financial derivative product among the financial sectors. It seems to make a lot of money, but however, if it's not well connected to the real economy, it may create some of potential problems. In the beginning of global financial crisis, after the Lehman Brothers bankruptcy, China PBOC raised a question that we need to light the financial sector to mainly provide a good service to the real economy. So I think that for real economy, that today's audience may have some questions on that. I'm waiting to have a Q&A on this. But recently I heard some of questions, so I choose a few of them to talk my opinion and my analysis. Initially, I talk about the reform transition. That means Chinese economy is still in transition, and there is some of imperfections. There is some of instability. Sometimes Chinese policymakers may make a mistake. So we got some anxiety and critics on this or that ones. But however, my observation is that the Chinese economy basically is quite resilient. Partly because the policymakers are quite pragmatic. Partly because China is still a very high saving country. The saving rate now is still 45% of GDPs. So we have a resource to carry on the reform and including to correcting the mistake we made by ourselves. One of and that's I should say that we especially try to study very carefully about the license in Japan, because we see this as an Asian economy. Japan had a very fast development and later on have a so-called last decade. So Chinese economy may have a similar overheating and over-leverage problems. We need to absorb the knowledge and the lessons from Japan. But meanwhile, I think we need to have the careful observation of Chinese economy. Recently, there are 3 or 4 major questions and doubts about Chinese economy. Number one is that the debt leverage is too high. But Chinese government now already have a deleverage slogan and some plans. Personally, I don't think that there is a quick way to deleverage. Chinese economy may maintain the overall leverage in GDP around 250%. We try to stabilize in these things. We know that we need to prevent any further acceleration of that financing. But meanwhile, we also say that we need to treat different countries differently. In some other economy, they may have a similar percentage of total debt, but if the debt is US dollar or foreign exchange denominated, it's much more dangerous. For China, although the debt to GDP ratio is high, but mostly it's domestic currency denominated. And since China is a high saving economy, those of saving transfer into a debt financing. We sincerely hope that some of saving may develop into equity financing. But however, the equity markets develop gradually. Sometimes it's a bumping road. So although we sincerely hope to develop faster of equity financing, but we still need to have a patience. But along the gradual development of equity financing, I think the total debt financing percentage could lower down a little bit. So another, we see that in the future, the saving rate is going to come down. It's already come down from 52% of GDP. Now it's 45% of GDP. In the next generation, because of demographic changes and the habit of expenditure of young generation, so we are going to see that it's going down to 40% or even lower. So it's also bring the change of the debt leverage problem. Another critics is to say that they saw very much of capital outflow recently in China. We're going to work together with many emerging markets to deal with this kind of problem. Many emerging markets have similar problems. Theoretically, Western countries suggest to use only exchange rate to solve the balance payment and the capital inflow outflow problem. But however, we need to have a more carefully study on the situation of emerging market. We need internal and external condition. So for many emerging markets, we still need a kind of buffer to deal with the inflow and the outflow. So I think it's another kind of a challenge, but hopefully, I think China may have a better condition to deal with these kind of things. Finally, that's a risk. People see that the confidence of Chinese private sector now is declining, or is relatively in the low level. So recently, the central government, I think last week we heard the Chinese Premier Li Keqiang talk about how to encourage the confidence of private sector in China. Partly, I think that's we need to be careful in the policy making to create a level playing field. To prevent the resource allocation to crowd out of private sector. But on the other hand, there is a phenomenon. In the recent years, some of large private companies, they had some problem. They use fraud measures to capitalize themselves. So it's not a really equity money, but they borrow some money to build the capital, and later on use the high leverage debt to financing themselves, to have many risky investment. And then when those kind of bubble bust, then we need to deal with those kind of bankruptcy case. Yeah, some of you may heard some of big case like the unbound insurance or the other names. So we see suddenly the risk of default rate of private sector, large companies. Then during this process, the private sector's confidence may have been lowered down. So we emphasize that we need to have a good disposal procedure to dispose those of failed company. But meanwhile, we still need to emphasize how to improve Chinese private sectors as a major engine of Chinese economy. So there may be many other questions I would like to discuss with you. But I think everybody knows that the trade war was a major topic in the last year, especially that's after June of the last years. But however, recently there are some of good news. It seems that the trade negotiation is going well. Yeah, we sincerely hope that we don't have too much things to worry that much. But anyway, it's China. We could clearly mention that we are stand for the free trade and investment. We support multilateralism, and also we're going to actively join the WTO reform discussion. I think we may share a lot of common point with UK, with especially the financial sectors in the city. So yeah, I've already talked too much. Thank you very much for your attention.
Thank you very much. Governor Zhou, thank you on behalf of everybody. I had lots of questions myself, but in view of the time, I'm going to not ask any in the unlikely event that nobody here does. So I'm going to probably let it run a little bit longer than we'd planned also. So there are roving mics around. 2 instructions before I come to the first one. Put your hand up if you have a question. Youth and sex are on your favor here. I'm trying to make sure. I'm a big believer of Chatham House becoming younger, so no hint there. But whoever asks the question, if you start making a speech, I'm not going to allow you to continue. So it has to be a brief question in the precious few minutes we have left. Who wants to ask a question? You look quite young, so you can be the first person. Please say who you are.
Thanks, Jim, and thanks, Governor, for the very interesting insight for China's financial sector. I'm journalist from China Daily. My question is...
Oh, the lighting's bad. I wouldn't have let a journalist ask the first question. It has to be really quick, Minjo.
My question is about the China's new foreign investment law. So at this year's 2 sessions, I think China's new foreign investment law is one of the most important legislative agenda. So would you please elaborate a bit more first, the real effect of introducing such legislation? And second, the timing significance.
This sounds like it's becoming a speech.
No, that's it. The timing significance of introducing the bill amid the China-US trade war. Thank you.
Okay, while you're thinking of that one, come over here. There's a young lady sitting in the middle.
Hi, my name is Eva, and I'm financial crime risk screening compliance. My question is a little bit more generic. You are saying that China financial sector is still in the process of reform, and I just wonder whether there's such a thing like the end of the game or the end of the journey, and if there is such a thing like completed and complete financial sector reform, how does it look like?
Where the end game is
Yes.
of reform.
Thank you.
Perhaps one more, and then you can try to answer all three. I think there was a couple of hands further towards the back. Oh, they've gone. Okay, would you like to answer those two questions? And there's another lady at the back there. Go on, here's our third question.
Mr. Zhou, my name is Bihe Chen. I work for McKinsey & Company. So you mentioned in the talk that China has constantly been thinking about reforming. And as a young person in her 20s, I feel the change every time I go back home to Beijing. Things are so different. I need to adapt to a new way of life. That's amazing. But I was wondering, at what point can we be confident as a Chinese to say that we no longer have to feel desperate about changing, reforming all the time, but rather we're happy about how we're doing, and our priority would be keeping the stability rather than, racing and sprinting all the time. Thank you.
That's a cousin of this question, really, but Governor Zhou.
Okay. Thank you very much for this question. I try my best to discuss that. For the foreign investment law, let me say that the first joint venture law in China was legislated in 1979. So at the very beginning of reform on the open door policy, I talk about the end of 1978. That's Mr. Deng Xiaoping initiates the new policy framework and the reform on the open door policy. And the second years, we set up a joint venture law. At that time, it continues into 1980s and 1990. We have three foreign investment law. One is joint venture law, another is foreign partnership law, and another is wholly foreign-owned investment law. So that's gradually we need to streamline the different legislation in China. Another one is that in the early version of foreign investment law, there was not enough clause to mention about the modern corporate governance. Recently that's China, we joined the G20 together to recognize that a so-called G20 and OECD corporate governance principle. So we needed to put those governance issue into the foreign investment law. It's also to provide the guarantee, to provide the confidence for the foreign investors. Other reason, in my mind, is that also Beijing had some correct conception of foreign investment law and regarding policies. However, many of Chinese local officials, the provincial governors, provincial officials, the municipal officials, they may add some of their own policies, together with their own understanding, including some things are not create fair enough competition that's among each other. Sometimes they may have implied subsidies or cross-subsidy among each others. So we need to have a clear concept and the new laws to let the whole nation, especially the local government, to know that what to implement, what trying to avoid, including some of local industrial policy. It's may actually prevent that's the fair competition. It may not give a good enough confidence for the foreign investors. Personally, I don't know whether it's related to the China-U.S. negotiation, trade negotiation. But surely, that's some of complaint, some of critics. I think it's helpful for Chinese legislators to realize that we still need to do the job better. So this is my understanding of the legislation work. But you know, I'm not the authority in this regard. We are waiting for the People's Congress, I think in a few days, to conclude the new legislation. According to my experience, this kind of legislation should not go to the level of People's Congress. For example, you see we have some of company laws, we have security laws. I mean that's security market. That's the laws. It's actually it's passed in the standing committee of People's Congress. But the reason that the foreign investment law now is presented to the People's Congress, the highest level, to discuss and to legislate it. That's because in the beginning of the reform, that was 1979, the first joint venture law was approved by the People's Congress. So later on, if you try to improve or you try to have a new version, modifications of the laws, so it's come to the People's Congress. Thank you for that.
Going to show the end game.
The end game. Theoretically,
can your young Chinese overseas citizens relax?
If that's we say that to making changes of the society and the economy, it's never ending. But in my understanding, if we talk about the economic reform, my understanding is mainly means that the Chinese economy shift from the old pattern of centrally planned economy, the Soviet type economy, into a market economy. So if we gradually, to let the market to play a good enough decisive roles of resource allocation, if the related legislation basically completed, basically we may end this round of reform. But however, yeah, each country, each economy still have many new challenges and for future to change along the times.
There's never an end game for anybody.
But there can be an end for a specific transition. We always know that for the social and the economic improvement, we try to measure by using the GDP. I think GDP is, especially per capita GDP, is a good measurement for people to become happier. But we also know that some things it's very difficult to be measured by the GDP. So that's we may add some things, the indicators about the happiness, including the environmental protections. For Beijing, I think the good air qualities, and also to emphasize the value of a family, to emphasize those of culture values, culture traditions, many things. I think it's also under the way for Chinese government to emphasize. But for the economist, we hope some things could integrate into a good formula of indicators. For example, we may consider to use the negative contribution to GDP of the environment factors to say that if you have a pollution, so that's actually the GDP should deduct it. But other, because elsewhere, it's very difficult to add the economic indicator with those of the social indicator, the happiness indicators, and finally, different people may have different views. There is no aggregate things. So we still think that the aggregate formula is useful and maybe helpful for the more general aggregate indicator.
So actually, Governor Zhou, you've brought us to a rather nice place where unfortunately I'm going to stop proceedings with your very interesting comment there about deducting pollution to GDP. I think you may get another invite from Chatham House to talk for our sustainability centre, because it's a very interesting idea. I apologise to everybody else that I'm sure had questions. I don't want to separate anybody from the refreshments, especially our special guest. To remind you, it's going to be on the first floor as you go up the stairs on the left, I guess. So thank you for everybody for coming and for your time. And of course, please join me in thanking our very special guest.